Elanor Investors Group is a listed real estate investment manager that was established in 2009 and listed on the ASX in 2014. Since inception, we've delivered our investors over 20% average internal rate of return. The Elanor Commercial Property Fund is a listed REIT that was established in December of 2019, and since that time has delivered very strong returns for investors. The fund has over $500 million of commercial office assets across Australia. The investment strategy for ECF is differentiated in that we invest in commercial office assets that have a competitive advantage in the markets in which they are located. So what that means is that at any point in time, we have a very deep tenant pool wanting to be in our assets or looking at our assets because they do have that competitive advantage. Since listing in 2019, the fund has performed exceptionally well on many fronts. Firstly, we significantly outperformed our PDS forecasts with earnings over 20% above what we forecast when we listed. We've materially outperformed our peer set over the COVID period. We had very little in terms of COVID arrears across the portfolio, and all that is due to the fact that we have assets which have a very strong tenant pool and have those competitive advantages in their relevant markets.
Demand for the commercial office market really picked up in December 2021, and we've seen consistent demand since then. But primarily for those assets that are high quality, have strong amenity, good location, and overarching have a strong ESG credentials. So we have seen that across our portfolio, play out across our portfolio, and also in areas like Sydney CBD. Buildings, new developments, prime buildings, which have all of those credentials, have been in high demand, even rents increasing to around that $2,000 a square metre net. And that to us just reinforces the relevance of the commercial office, that if you have a good product, that you have the amenity, have that overlay, it will be in demand.
The returns from ECF are very strong. In terms of distribution, we are delivering 9.4 cents per security, which equates to an 8.5% distribution yield. We also have delivered very strong NTA growth as a result of revaluations in the portfolio on the back of successful leasing outcomes at assets like Cannon Hill and Upper Mount Gravatt in Brisbane. Furthermore, moving forward, there is a very attractive entry price point with a weighted average capitalisation rate of 6.33% and a rate per square metre of capital value of $6,800 per square metre. What that means is that we've got further upside to come in the portfolio.
We are setting clear strategies for each of our assets, and what we are really focused on is listening to the customer, what they're looking for and where and what type of demand that is. And two assets that come to mind are WorkZone West. We had a clear ESG strategy for that asset and we've executed on it. We are the only asset in Western Australia that has 6-star NABERS energy rating and is a carbon neutral building. And from that, we now have a clear pathway on how to roll those ESG initiatives across our portfolio. Another asset which comes to mind is Cannon Hill in Brisbane. We set a clear leasing strategy there, once again listening to the customer and investing strategically in that asset on our capital initiatives. In 3 weeks of executing on all of our initiatives, we received a heads of agreement about to finalise that lease, and by executing on that, that's resulted in both income uplift and valuation uplift.
The outlook for ECF is very positive. We have a very low expiry profile over the next 2 years, which will result in strong distribution yields for investors. Further to this, our conservative rental price point in the portfolio means that we have an ability to continue to drive value.